Welcome back. Union Bank of India has reported a very strong set of numbers. We have seen the net interest margin at some kind of an 8-year high. Very good net interest margins, largely because provisions have, started to decrease. The high write-offs, of course, have improved asset quality. The slippage ratio also is at an 11-quarter low. So in terms of asset quality, very little to complain. Nitesh Ranjan, Executive Director at Union Bank, is joining us now. Mr. Ranjan, good morning and thank you very much for joining us. First up, if you can tell us, you're moving to a new tax regime. So you all are expecting that your return ratios are going to improve?
Yeah, good morning. We are planning to move to the new tax regime during the current financial year. There was a load of the deferred tax assets, which we have taken care of almost by the Q2 of this year. And now when we move to the new tax regime, that hit will not be there on the balance sheet. So effectively from close to 35% of tax rate, we're moving to the 25% of tax rate, which will obviously will help us in improving the RoA further.
Okay. If you can tell us a little more about asset quality or recovery. Are you seeing, your GNPA still at about 6.3 is higher than most other banks. It's on the higher side. Are you expecting good recoveries from loans already written off?
Yeah, as you said, Union Bank is reporting most of the numbers, which is kind of decadal high, including the asset quality. So this year we have given a guidance of bringing the gross NPA to below 6% and NPA below 1%. And in both the numbers, you can see that we are trending towards that. And by the end of the year, we are sure that we'll be achieving that guidance. And overall recovery, if you look at, we have a guidance of around 16,000 crores of recovery during the current year. And in the first half, we have already recovered close to 7,800 crores. And we are hopeful that like last year against the target of 16,000, we recovered 20,000 crores. This year's also recovery should be much more than the guidance of 16,000 crore that we have given.
Okay, so we can expect some 9,000 crore at least in the second half?
Yeah, sure.
Okay. What about provisions? Even that's been coming down. Can you give us some guidance on how much they can come down and therefore how much your credit cost can come down? It's already below 1%.
Yeah, so credit cost also, it is coming down now. It is around 80 basis points, which is close to 50% lower than the previous year. And the cost of credit cost for the seasoning requirement is very less now. So going forward, actually the credit cost should trend towards 0.7, 0.75% kind of thing for the whole year. That is our expectation.
Okay, so you can expect a stronger earnings and a lower cost to income in the second half compared to the first half?
So if you look at our cost to income ratio, we have been in the range of 43 to 44% for many quarters now. And we believe that the kind of business model that we have built, we should continue to maintain this and in fact move towards the lower level of cost to income ratio also. We have taken many structural initiatives in the bank which will further reduce the cost.
Okay. Your annualized credit cost is 0.97. What is the annualized credit cost now?
So annualized credit cost for the Q2 will be around 80 basis point, 0.80.
Okay. All right, leave it at that. What about growth, sir? There is no denying that quality of the book is very good, but growth is not coming at the rate it is coming for the banking average, both in terms of advances and deposits. So first, deposits, what is the cost of deposits and what is the pace at which you can grow it?
So this quarter, the deposit growth has been close to around 9%, led by savings growth of around 4.5%. And this is close to the guidance that we have given for 8 to 10% deposit growth for the current financial year. So we are growing and what we are doing is we are not taking excess deposit. In fact, even if you look at our bulk deposit, the certificate of deposits, actually we have brought it down from the March 23 level. That is only with the objective of reducing the cost of fund further so that we are able to maintain the higher NIM. On the advances side, if you look at again, while our guidance is around 10 to 12%, we have grown this quarter around 9.5%. And within which the RAM segment, all the three retail, agri and MSME have grown close to 14 to 15% range. On the sequential basis also, if you look at current quarter, we have grown around 3.5% in the loan book. So loan book is pretty healthy and particularly few segments in that, like the gold loan, education loan, growth rate is pretty good. And we are sure that we'll be able to achieve the guidance level of 10 to 12%. And the Q2 number also, I'll say that when we look at the loan growth of around 9.5%, there is some base effect also. You'll recall that in September 2022, we were growing at close to 22% YOI in the loan growth. So there is some base effect also. But on a half-year basis, the growth is in line with the guidance.
Okay. It is still lower than the banking average. Banking sector average is running at 15-16%. So compared to that, even your guidance and your actual performance at 9% is lower. Are you confident that for the full year you will get to 12%, or can you even do better?
Yeah, sure. So 10 to 12% is the range of guidance for us, and we'll definitely be achieving that. As I said, that will be led by the growth in the RAM sector, which is continuing to grow 14 to 15% range YOY quarter after quarter. On the corporate book also, as we speak, we have close to 40,000 crores of term loans already sanctioned and yet to be disbursed. So some part of that disbursal will come. We have close to 40,000 crores of line of credit available with us, which will happen. Some part of that will happen in Q3 and Q4. On top of that, any point of time, we have 30 to 35,000 crores of new proposals under consideration. So all this together, I'm sure that the guidance level of advances that we have given will be able to achieve.
What is the percentage of unsecured loans?
Unsecured loan for us is close to 1.4% of the total book. And that is doing pretty good, actually.
Only 1.4%, but I thought you said that your retail and SME, retail, agri and MSME is doing very well. The unsecured book is only 1.4%.
Yes, unsecured book as a percentage of total loan book is 1.4%. And as a percentage of the retail loan book will be close to 7%.
Okay. And what is the rate of growth there? I mean, I'm only asking because the Reserve Bank is worried about those areas. What is the rate of growth of unsecured retail?
So the unsecured retail loan for us is growing close to around 35% YOY basis. But the base is very small, and our exposure is most to our existing clients, who are mostly the salaried clients of the government PSUs or the good private sector companies.
Okay. At the moment, your RoA is 1.07%, right?
Yes.
And by year end, you will be, what kind of an RoA can you report when you take to the new tax regime?
So interestingly, we had given an RoA guidance of 1% for FY25, but we have been able to achieve that in Q1 and Q2 both together. Current year, our estimated that we'll be able to just above 1% of RoA. And when we finally move to the new tax regime, maybe another 5 to 10 basis point gain could be there in the RoA.
So that will be what,
1.05
or 1.1? Sorry, for the time being?
For the current year, we are keeping the guidance of 1%.
1%. But with the new tax regime, it can go to 1.05 or 1.1. What's like?
Yeah, 5 to 10 basis point increase could be there.
Okay. And can you similarly give us about ROEs? Where is it now? What's the target you're working for the full year?
So ROE guidance, generally, we have been given in the range of 15 to 17%. Okay. Currently, we have reported close to 18% of ROE. And we believe that this is the number, around this number, 1 or 2% here and there, the Union Bank will be reporting the ROE.
Okay. What about net interest margins? I'm sorry, that should have been a more important question. Your net interest margins continue to improve, but for the rest of the banking sector, it started peaking off. Will this be the best net interest margin? Should we see half-year lower net NIMs in the second half?
See, we have given a guidance of 3% margin, but we have been reporting higher than that. What is also happening in the system and with Union Bank of India is that the asset repricing is happening faster than the liability repricing at this point of time. And this is the cycle we have seen from August last year. This has been happening. But as the deposit repricing catches up, I think the NIM will trend towards little lower level. For the current year, our guidance is that of 3%, but I'm sure that at least 5 to 7 basis point higher than the guidance we'll be able to achieve into the net interest margin. We'll also recall that we have raised capital of 5,000 crores in the month of August, and that is also giving some 3-4 basis point jump in the margin for the Q2 that we have reported.
Okay. All right. Good to hear that. Thank you very much, Mr. Ranjan, for joining us with all those details on Union Bank. Have a good Diwali and the second half.
Well, thank you. Actually, greetings for you too. Thank you.
Thank you. Well, actually, the second hour of trading is also very good for the markets. We've seen the Sensex and the Nifty now creep into the green, led by some large stocks like Reliance, now up almost 2%. Ultratech Cement is also carrying some of the, doing some of the heavy work. The two Adani stocks, 1.2 and 1.1% higher. Enterprises and Ports. Asian Paints, some of these stocks, and actually even the IT stocks have started to come out and perform. Hindalco is doing well. Ultratech, of course, the expansion news is helping. The Bank Nifty is still struggling a bit. It's still down 0.4. But remember, in early morning trades, it was down 0.8. So markets on a recovery metal. So hopefully, the low for the day has been set. At least the first hour low is being respected. Wrap up on Bazaar. Chart busters will take that action for.